All right. Hello, everyone, and thank you all for coming here today in the afternoon. And we're talking about something very interesting. It's relationships between blockchain money and global payments. I know a lot of people are very interested. And then before we start off with the panel, I'm going to do a very quick introduction also around the panelists as well. So my name is Chloe. I'm an investment director, PR director, portfolio manager at Fenbushi Capital. We're the earliest investor for Ethereum. So back in the days when Vitalik had the idea, came to our founder, brought him to China to start doing the roadshows, and that's how we got started. So we go all the way back. And then I'm also just going to pass the mic around and then ask all the panelists to do the intros.
Thanks. Myles Harrison, Chief Product Officer at aminagroup. So we're a global regulated crypto financial services group comprised of a Swiss bank, an Austrian CASP, and a Hong Kong SFC licensed entity.
Hi, I'm June, and I'm from REAP. So REAP is a card infrastructure layers solution, and we also have an expense management tool, cross-border remittances. We're headquartered out of Hong Kong. We have an MSO license there, Singapore MPI, and also Mexico MTL alongside a virtual asset registration setup. So we're also entering the US market soon, and I'm a global partnerships and US go-to-market lead.
Hi everyone, I'm David. I'm Chief Strategy Officer at Pharos, a new EVM compatible L1, focusing on the financial use cases, particularly focusing on the vault economy, focusing on, I guess, the institutional DeFi use cases.
David Palmer. I run Pairpoint, the Web3 business for Vodafone. Vodafone is a global carrier, but also has the largest bank in Africa. With over 90 million financial services customers. So, yeah, looking forward to this discussion.
Thank you. Andrew Isaacs, Chief Operating Officer of Aurum. Aurum is a Web3 neobank focused on bringing institutional-grade AI trading agents to consumers, as well as converting crypto deposits, helping folks actually utilize, monetize, and spend their crypto by way of our cards and other financial solutions.
All right, perfect. So that's all the panelists for today. We're going to start off with the questions since we only have a couple minutes. So we know that stablecoin B2B payment volume reportedly went up 30 times in the last 2 years, which is pretty crazy. The question is, where is that volume actually flowing? How much is that is real economic activity versus crypto native circular flows? So I guess we'll just start one by one. Feel free to.
Sure. Yeah. So, from our perspective, and I'll talk primarily about the regulated bank entity from a Swiss point of view. So, we're starting to see corporate treasurers beginning to use stablecoins. It's still very early days, I would say. We still primarily see that a lot of our crypto native clients are continuing to use stablecoins as a conduit between TradFi and DeFi or CeFi as well. But we are seeing quite a bit of growth on the corporate side. We're seeing demand for salaries and payroll. So we're about to partner with a major payroll provider to roll out stablecoin payments for gig economy workers, contractors, really tackling the core problem or use case of cross-border payments and the high costs, the delays, the time it takes.
I think there's three sort of like use cases. The first one for us at REAP is really for clients to deposit stable coins with us and then off-ramp it. And we are the ones that facilitate in the stables to fiat kind of like journey. Typically that's with the expense management tool, with the card infrastructure so that the consumers or cardholders can be spending. So that's the first use case. Then the second use case that we also see quite a lot is cross-border remittances, which is more like a B2B function. The way I see it is like it's very much like a payments rail. So think about your usual banking and correspondent banks. Instead of having 4 different parties happening across the globe, you have just one party that's moving money across borders. And then the third one really is something where, let's say your exchanges, they want to hold on to that kind of funds and have a card utility tool to kind of go around where the cardholder is spending at the cashier. That's when you actually do see quite a lot of volumes being converted from the more speculative coins to the more stable coins and then off-ramping into fiat. So I think those are the 3 use cases that we see and support.
And I just wanted to second what Myles and Jun mentioned about, I think it's a gateway for institutions adoption. So there's a lot of enterprises, corporations that on-ramped into the stablecoin and the stablecoin into the DeFi economy. So that's their way get in. And then also we see that as a settlement layer where particularly from our vault economy perspective, there is a lot of on-chain asset management, on-chain distribution happening, and then on the other side is always the stablecoin. So there's various stablecoin as a function as a liquidity source. But I think those are existing use cases. But in the near future, I think we need the programmability, which this agentic payment is taking over. Many of the activities right now, taking Pharos as an example. So we has been focusing on building the agent-fi, which we envision most of our users in the future will be agents. And then we need the programmability in order to process this efficiently, accurately, and then just at a relatively lower cost. And then stablecoin is a perfect way of doing that. So I see that as a gateway and then also as a future of the money.
I mean, a stablecoin is a blockchain-produced money. Yeah, cryptographically secured, and it's basically a wrapped currency. I think what makes it special is that it's programmable, and it can go peer-to-peer or across networks, right? So it's the digital version of the old money system. In terms of use cases, I mean, we're seeing people on ramp and off ramp using stable coins. You're seeing some cross-border remittances and transactions using stable coins. I'd like to think that going forwards it will be, as you were saying, the currency for agentic commerce. Right? It will be the currency that AI agents use as we move from the mobile commerce to agentic commerce. And agents start going across different platforms. The stable coins will be used to offset exchange rate changes, but also used to, for its programmability, right? So I see that as the future. I mean, I think, if I'm honest, I think now it's a hype, right? There's a lot of hype around it, but I think the potential is just about to start getting unleashed.
Yeah, I think not too much to add to what folks have said. I obviously strongly agree. If I have to give a sort of analogy, if I date myself a little bit, but I look back to early 2000s when companies started selling things online, they were known as an e-commerce business, right? Every company is an e-commerce business, right? And I feel the same in many ways about stable coins, right? It's smart money, it's intelligent money, but it's just money. And with a lot of the solutions my peers are working on and putting out there, that inertia or that kind of just barrier to just becoming easily spendable, easily usable, I think is just going to disappear over time, and it will just be another way of exactly what my colleague said here, just spending money. So I think it will. I don't think it's going anywhere.
For sure. Yeah, that's great insights. And I actually have another question for all of you. I think we'll start with Andrew first. So it looks like the traditional payments networks such as Visa, MasterCard, Swift versus the current blockchain rails that has gone up from we're competing to we're partnering in the last 24 months, which is only probably 2 years ago. What do you guys think? Is that actually real, or are they trying to just hedge each other? Or is there, for example, if something is going to break, what do you think is going to happen first? So that's a pretty tough question. Yeah.
I think it's an interesting question. I don't have a crystal ball. I think the payment rails that exist today, the ones that MasterCard and Visa put off, are phenomenal. They do what they need to do. We can all walk out here and spend how we need to spend in a very seamless and efficient way. And I just think it's a fact of large incumbents. First, a little bit of trepidation when looking at new technology. Do we trust it? Do we understand it? How can we use it? I think once they've got over that hurdle and being like, okay, is the way I look at it is that for the incumbents, is this a way for us to do what we already do, make the money we already make in a more efficient way, in a more scalable way, in a more secure way, in a more intelligent way? And I think that barrier is slowly being crossed. And so I think that partnering, if you will, is going to go from strength to strength. I don't see a break in the system as much as there is a partnering in the system just for more efficient settlement.
I mean, I think if you look at it, the card schemes have done a great job. but they've also essentially earned a lot of revenues from imposing a tax on every transaction that happens, right? And as we move from cash to more card payments, I think COVID helped that. That tax has increased, right? And when you have low margin businesses, sometimes that tax doesn't make any sense. So low micro payments, it doesn't make any sense. So I think it's natural for these businesses to look at efficiencies that come from blockchain. Blockchain payments, the title of the thing, the bridge between blockchain money and global payments, I think, they'll become the same thing, right? Because, the whole point of when we started on this journey was all about peer-to-peer. I can pay you peer-to-peer, and we had peer-to-peer with cash, right? But it wasn't global. And I think, blockchain does offer peer-to-peer transactions, right? And it does offer, it can disintermediate the middlemen. I remember before, when you wanted to send money from one country to another, you used to send an instruction, and it would go through one bank that would send it to another bank, and then they sit on the money and earn interest, right? Now, what we want is the ability to send money from one entity to another entity directly, instantly, 24/7, 365. So I think blockchain provides that infrastructure, and I believe that will be the infrastructure of the future.
Completely agree. I think it's definitely a real thing, and it's actually happening right now. So I feel like it's almost kind of like when we're thinking about a Web 2 to Web 3, like we were thinking about, is that going to be TradFi or DeFi, but eventually they're emerging. So I feel like the traditional payment rails and the blockchain rails they're emerging too. And then this actually already happening in some of the areas where you see that some common, I guess, trading pairs where you have, or maybe the stable coins are already being utilized by some of the major payment rails and the payment solutions already. And I think again, thinking from an agentic perspective, I think that is a must. So I can imagine that the agents that sending a message to a bank and the bank sending a message to another, trying to complete a cross-border payment transaction. So this is definitely a must-have infrastructure, and then this will definitely happen soon.
Yeah, I think the way I see it is actually a blend. It's because REAP is actually more of a hybrid kind of, we straddle the Web 2 and Web 3 world with our Visa principal issuer licenses and also our banking partnerships. And the way I see it really is there are different types of payment rails, and stablecoin is one of them, and that's why Visa and MasterCard sees the need to install it as one of the payout methods to the merchants and to take that from issuers as well. If you think about it in a larger ecosystem picture, in the US you have RTP and FedNow that does a similar thing in terms of 24/7 instant. That's also similar in India with UPI, and Brazil Pix, also all over APAC. There's also those banking rails that are really, really fast and really seamless. But the thing is, with stables, what is interesting is that it's gone from a speculative to an applicable kind of technology. And to me, I think a lot of people think from a private company perspective, like how do you create that flywheel? I actually see it from a macro perspective as a tipping point. So we're now already in that phase where there's enough ecosystem users of stables for it to be a legitimate kind of payment method for Visa and MasterCard to then say, let's product prioritize this and enable this as a chain, because there's enough users now that see the value in that particular chain. So I think coming from an original like TradFi fintech perspective, I saw kind of firsthand how these enhancements from a technological perspective really changed how settlement delays became from like T+4 to the merchant to almost T+1, right? And so this is one of those utility values that stables actually provides, and it's definitely not fighting. Visa, MasterCard is not fighting with stables. They're actually playing in unison in the same place, playground.
Yeah, I mean, I think for some people it feels like this has come out a little bit of nowhere for Visa and MasterCard to suddenly start playing with stables, but actually they've both been pivoting towards payments for many years now. They've realized that margins are continuing to compress from an interchange perspective, particularly in a lot of jurisdictions. The regulation has continued to drive those down and down. They've recognized that their future business model was at risk, and so Visa acquired Currency Cloud several years ago now, right? And they've only just recently rebranded that under the Visa Direct brand name, but MasterCard has also been quietly acquiring. So they've been shifting to this business model for some time. I think what they're doing is, like the rest of the market, is now adapting and seeing the next evolution of how payments will work on a global scale. And I think for anyone that's involved in crypto, what's exciting or payments for us at the moment is that there's a core element that you need to drive adoption or wider adoption, and that is scale and distribution. And Visa and MasterCard, whatever you think of them, they have the scale and distribution. And we're about to see that unfold at a rapid pace that we haven't seen in the last sort of 5-6 years.
That's great. Yeah, I think we all come to the mutual consensus of we are hoping that they're partnering for the next a decade or even more, right, to make everybody easier with payments with blockchain infra in general. So I do want to dive a little bit deeper, just to like personal questions to June. So we know that Reap is plumbing stablecoins into corporate cards and bill payments. So what are the customers actually buying? Is it FX cost? Is it settlement speed or programmability, or just like operating account that doesn't require U.S. correspondent bank? We'll love to hear your insights on it.
Yeah, it's actually all of the above, really. I think the first piece really that we were trying to tackle is the off-ramping piece, and ensuring that anyone who has who has a large amount of crypto deposits have a way to spend in sort of the mom and pop shops to Uniqlo, for example, with their card. So we help to supply that. We have those infrastructures for them. But then the second piece that we were also trying to optimize was the settlement delays. And when you take away all of the correspondent banks and take away the T+4s in terms of payouts and settlements, we're essentially also compressing the number of players in the space, and therefore fees also get driven down as a result. And if you kind of have an ecosystem where most people are using USDC or USDT in some cases, you don't really need to be doing like FXing, right? And so from a treasury perspective, you keep your FX kind of like hedging intact. So we provide all of that. And we have a lot of B2B clients that we power now. So even last year, per annum, we did about 5 billion in terms of volumes. And we're seeing a lot of not just APAC players on our platform, but also LATAM as well. So yeah, there's a lot of corridors that we're plumbing right now, and we're hoping it'll grow some more.
Perfect, that's great. I do also have a question to Myles. So we know that you're a CPO at one of the few FINMA regulated banks. So you sit closer to like the product surface than like almost anyone in the regulated banking. So Amina is also the first regulated bank live on a 21X and has been piloting Google's Universal Ledger for near instant bank-to-bank settlement. So for you, from your perspective, like what does an institution client actually pick Amina for in 2026? And where do you see the biggest product gaps when it comes to regulated digital asset banks today?
Sure. So from an institutional perspective, picking the right counterparties is really important. And understanding how you manage risk when you pick particular counterparties. So many of our clients come to us because we are a regulated bank that not only offers stablecoins, but a wide range of blue chip and altcoins as well as a range of products on the traditional finance side. And we take all of the stablecoins that we offer through a strict due diligence process that is overseen by our regulator FINMA. Not all stablecoins are created equal, as we know in this room, and that's incredibly important, particularly for maybe corporate treasurers who have not handled or dealt with stablecoins before. What is a reserve-backed stablecoin versus an algorithmic stablecoin, right? And what are the risks? And how do they really understand those risks? And so we help our clients go on that journey. And they have comfort and the trust and transparency by working with us that we've taken those coins through those processes. And we only work with issuers that are themselves licensed or regulated in the relevant jurisdictions. In terms of gaps, I think we're still at an early stage in terms of how corporate treasurers can use stablecoins, things like what impact it has on their balance sheet, what the accounting treatment is. These are things that we can't necessarily as a financial institution sort of solve for them, or depending on where they're based. We also have CARF coming in, which is the new global reporting standards, which is great because it harmonizes across different jurisdictions, but it creates also things to think about for corporate clients.
Sure, That's great. There is a time restraint, but I do want to ask for everyone sitting here today, because I'm pretty sure that a lot of you guys are probably either building on this or just curious in general of just getting into the intersection of blockchain and also global payments, right? So what is one piece of advice that each one of you will give to our audiences today? And then what is something that you would like to warn them on to not estimate or not underestimate when it comes to either investing or building or just learning about the space in general? So we'll start with Myles.
I've probably repeated this a lot in the last year, but we come across a lot of projects and a lot of companies that are obviously looking to work with a regulated bank, and it's really just double down on making sure that you're solving a genuine problem. I think the industry has moved on quite a lot in the last few years, and it's great to see, particularly walking around the consensus floor earlier today. But yeah, just make sure you're solving a genuine problem, and you're able to articulate what that is. Yeah.
I think that's a good one. Another one I was thinking of is also compliance and due diligence. Just make sure that everything is buttoned up, your policies are in place, and you're not just writing the policies, but also doing all of the due diligence.
It's not necessarily advice from my side, but just the sharing that observation is that thinking from the particularly RWA like distribution perspective, in the past few years we've been seeing that the large treasuries or maybe some on-chain liquidity funds that come in and buy the RWAs because everybody wondered who's buying the RWA. But starting from earlier this year, there's a lot of payment company actually comes in. There's some prepaid card companies or just the payment solutions in general. They're actually the main drivers of a lot of RWAs that issued on-chain. So I think that's definitely a trend that we're keep an eye on. And then also from also just wanted to second what June mentioned, that there is a lot of regulation or compliance issues that we need to be careful. For example, there's not every payment company are supposed to move the client money, right? So that's apparently that's some legal risk that we need to look for. But I do think that there is a lot of potentials in the payment and blockchain from just RWA and distribution perspective.
Yeah. I'd just like to say that we should have called it stable coins and global payments, right? Because blockchain money isn't just stable coins, right? We've just accelerated to that, and I think it is a great use case. But I also think if we go back, it was about cryptocurrencies and having peer-to-peer cryptocurrencies and being able to exchange them across platforms. So I don't think we should lose that and just go to stablecoin. I think stablecoins are important, but they're a medium of exchange across platforms, right, for on-ramping and off-ramping. I think I agree with everything that's been said. So it's about regulatory compliance and just thinking from a business perspective, not necessarily just a technology perspective.
Yeah, and I think the one thing that is not a risk, but actually something at least we're pretty excited about, and something that keep your eye on, is further integration with AI and AI agents into stablecoin deposits and into non-custodial wallets, and looking for customers and consumers are going to look to start generating significant yield around that, and how these agents are going to be able to plug and play into these deposits sitting there. I think that's going to become a massive topic in the future, and it's something we're actively working on.
I absolutely agree, and I think the conversation today definitely shows how fast the industry is evolving, and I just can't. Very excited to see what comes next. And then thank you everyone for being here today, and then thank you to all the panelists for an amazing insights. Thank you.
Thank you so much. Cheers.